Howdy, folks. Welcome to Liberty Call. Today is Thursday, January 26, 2023. Hope everybody's having a fantastical day out there in the interwebs. Pretty good day in the markets. See a lot of green across the screen here domestically and same across the rest of the globe. So looks like the Chinese markets were still closed except for the Hang Seng today. But like I said, lots of green. I guess people are taking those GDP numbers that look pretty good as a sign of, hey, let's get back in the market. Things are going to be pretty good. But again, I'd say slow your roll, folks. Don't let a few days of good data put you in an uncomfortable position if this long-term downtrend continues. So again, be careful out there, folks. But as far as we'll take the good news when we can see it. Got the market recap, some GDP numbers, and the employment numbers came out today. So we'll go through those. And let's go ahead and jump into the indexes and see how they did today. Dow Jones was up 0.61%, closed at 33,949. S&P 500 was up 1.11%, closed at 4061. NASDAQ was up 1.76, closed at 11,512. It looks like technology really took the bull by the horns today and was off and running. Small caps are up 0.64. The VIX receded 1.78% today. It's currently holding at 1874. Canada was up 0.49. Brazil up 0.02. Mexico up 0.5. Headed over to Europe. Germany was up 0.34. UK up 0.21. France up 0.74. The Euro Stoxx up 0.62. A lot of it, noticing that trend here, a lot of ups. Netherlands up 0.79. Spain up 0.87, Italy up 1.32, Switzerland, the one laggard here, down 0.76, and Portugal up 1.07%. Russian exchanges were both in the red, MOEX down 0.15, RTSI down 0.12. And the overnights in Asia, Japan was down 0.12, Australia down 0.3, New Zealand up 0.2. And like I said earlier, the Hang Seng was the only market that I show open today, and it was up 2.37% in the Chinese markets. The rest of them still closed. But like I said, pretty decent day from the way it looks. But obviously this isn't looking at the longer term trend. We haven't really broken any of those resistance lines at this point. So again, slow your roll. Don't get out over your skis at this point, folks. All right, well, let's go ahead and check out today's market recap, see what they had to say. Let me move things around. All right, let me get to my synopsis here. U.S. stocks were rising, led by tech stocks as GDP beat expectations in Q4. Despite economic growth slowing compared to Q3, the labor market remains strong despite job cuts in recent days by technology giants. The Fed is expected to raise interest rates by another 0.25 percentage point at its next meeting, which starts on the 31st and ends on February 1st. So next, was that Thursday and Friday or Wednesday and Thursday of next week, I believe. Tesla's better than expected results has contributed to the stock market's lift, and shares of Las Vegas Sands and Chevron also rose due to positive financial reports. So that is the news as far as stocks out there. So that is definitely some good news in today's market. All right, well, let's get to the news on the GDP. U.S. economy grew by 2.9% in Q4, according to the Commerce Department. So let's see what the synopsis of that it has to say. U.S. economic growth slowed to a 2.9% rate in the last quarter of 2022, which is slightly less than expected due to the impact of the Federal Reserve's recent monetary policy tightening on household and business spending. This is down from 3.2% in the third quarter and above consensus estimates of a 2.6% number. So did better than the consensus, but still, again, the economy is slowing, and we'll see what the Q1 numbers look like in a few months. But if the trend continues that we've seen the first few weeks here in this year, it'll probably be in the red again. But again, it's a little too early to tell. The Commerce Department's report shows that this growth was due to a rise in consumer and government spending. And anytime there's government spending, obviously that is not the best case for GDP numbers. Obviously, it makes the numbers look good, but when it's coming from the public spending, it's just not quite the same. government spending as well as private inventory investment, but it was partly offset by a decline in residential fixed investment, particularly in the new single-family construction and brokers' commissions. Exports also dropped, particularly in goods, reflecting a post-pandemic shift in spending patterns into services like travel and transportation. So, like I said, it's kind of a mixed bag right now. Some things are still doing well. Other things are starting to really sag. But, again, we have to, like I've said a number of times, things are probably going to get worse before they get better long term. All right. And then the last article I had here to cover the employment numbers. U.S. economy posts strong growth in Q4, but with underlying weakness. So I'm just going to skip down here to the jobs part of it, and we'll cover that. While many parts of the economy have shifted to lower gear, the labor market is showing no signs of substantial cooling. A separate report from the Labor Department on Thursday showed initial claims for state unemployment benefits fell 6,000 to a seasonally adjusted 186,000 for the week ending January 21st, the lowest level since April of 22. The number of people receiving benefits after an initial week of aid, a proxy for hiring, increased 20,000 to 1.675 million for the week ending January 14th. Companies outside the technology industry, as well as interest rate sensitive sectors like housing and finance, are hoarding workers after struggling to find labor during the pandemic. Quote, there are no signs of the latest jobless claims data that the labor market is cracking at the start of the new year, end quote, said Conrad DeQuatro, senior economic advisor at Breen Capital. So, so like I said, it's again, everything's kind of mixed today. We had a good number, we had a reduction in initial claims, but then we also had continuing claims go up by 20,000 for this week's report. So again, kind of half full, half empty kind of a situation. So, all right, well, that's everything I had for today. If anyone needs anything from me, please go to dsafinancialgroup.com. All my contact information's there. Hope everyone has a fantastical evening. And like I said, if you need anything from me, please go to the website, dsafinancialgroup.com. Hope everyone has a great night, and I'll talk to you next time. Adios.